Hello, welcome to our vlog titled Tax 2020 Workshop. You know, it's been a year since the COVID-19 pandemic hit us and everybody's staying at home. We still have to file our taxes. We're going to have a special guest. Her name is Elizabeth Grigsby. She's well versed with tax law. She'll do a presentation on taxes for 2020. Welcome, Liz. Hello, Liz. How are you? I'm fine. How are you? Doing great. We're really happy to have you be part of our workshop presenting and explaining about taxes. I'm really looking forward to it. Thank you for inviting me. I appreciate it, and I'm happy to help with this workshop presentation. Great. Well, I will let you take over. Sure. I'll be showing some slides with some bullet points and expanding on them and to help you understand it better. Great. Thank you. Hello, welcome to the tax workshop today. I hope you learned something new about taxes for 2020. Are you ready for tax season? You gotta get busy and get ready for those taxes. You're probably wondering who I am. My name is Elizabeth Grigsby. I have been working 30 years as a bookkeeper for ARC Bookkeeping Services. I took tax classes at the College of San Mateo, graduated and received my certification. I took the exam under the IRS and passed the exam, then got my license. And the license is recognized by the federal and state governments. You're probably wondering, what are income taxes for? The government imposes on the financial income that is made by entities in their area, and you either pay taxes or you get a refund. And income tax is key for the government to help collect the taxes, which are used for police, firefighters, schools, libraries, for the public. So the federal government funds these purposes from income taxes. The history of income taxes and wondering where that came from. You remember that story about Robin Hood and the king? The king would send his soldiers to homes and businesses to collect money. It was required and given to the king, and he controlled the money. Robin Hood did not agree with this and fought back. He took the money from the king and distributed it to the people who needed it for food for their family. And that's the story of Robin Hood. The federal government first imposed taxes in the 1860s when they were desperate during the Civil War. They had to fund guns and gunpowder, food, clothing, hospitals for the injured, bandages. They needed funding and money for this. And income taxes helped the Civil War. Congress had decided to add the new rule to the 16th Amendment in the U.S. Constitution. And that was in 1913, specifically for income taxes. And that's the system that we use today. I have a pop quiz for you. What year was the first federal income tax imposed? A, 1790s, B, 1860s, or C, 1910s? Which is the right answer? Let's see. The answer is B, 1860s. That was the first year that the federal government imposed taxes. Do people need to file a tax return in 2021? This depends on what your filing status is. If you're single, married, filing jointly, married, filing separately. What that means is if you didn't live with your spouse and the gross income was $5, doesn't matter your age, you have to file for taxes. The head of household, maybe you're a mother or a father of children under the age of 65 or over the age of 65. Then there's a widow with children, one mother or one father with family members. You can look at the gross income and see what's listed for each of those sections. You see this W-2 form. And what is that? This is for when you've worked 1 year. The company you work for fills out a report of the total earnings for the year and tax deductions, Social Security, benefits. The company files this and reports it. You then get a W-2 for the purposes of filing your tax return. If you've received a 1099 or 1099 miscellaneous income, you're thinking, what should I do with this? This is if you're an independent contractor, an Uber or Lyft or Instacart driver, a freelance interpreter, interpreting jobs. Those workers will get a 1099. If you earn more than $600, you have to file a tax return. All the documents you give to a CPA or a tax preparer, the forms that they use are these forms, and they're two different forms. 1040 is for a federal tax return. A 540 is the state of California's tax return form. Both of these forms are filled out. What is the difference between itemized and standard deductions? What does that mean? Itemized deductions are under Schedule A under the federal tax return. The itemized deductions are items that have been paid for out of your own pocket, and a company does not reimburse you. You list these items on this form. There is a checklist. Expenditures out of your pocket, like medical expenses, health insurance, prescriptions, doctor, dentists, car registration fees, those are all write-offs. Any charitable contributions, maybe you donate cash to churches or a Girl Scout cookies, fundraiser for school. These are things you can write off. Non-cash means that there was no money involved. It could be clothing or furniture, a car that has been donated. You can write these off. You just get a receipt from them. Unreimbursed expenses, like working from home, which you are doing during the COVID pandemic. People have to work remotely and stay home. And you're probably wondering, can I write that off? This is related to your work. I'll explain that next. Investments, stocks or IRAs, student loan interest, those are write-offs. If you own your own house, the property tax is a write-off. The mortgage interest that is imposed by the bank, you can write that off. There's another list that helps you gather important information for filing taxes with your CPA. Now, you're probably concerned about people working from home and if you should consider that an itemized deduction. You have to use internet. Work requires you to use a high-speed internet. There's children at home because they can't attend school. And you're probably wondering, how can you write this off? The state of California itemized deduction form, you can write it off. Unfortunately, for the federal tax form, you cannot. Prior to 2018, you were able to, but then there was a reform that was enacted called Tax Cut and Jobs Act, starting 2018 to 2025 for 4 years. And I wish that we could pull that back, but Congress is discussing this and they're still working on it. So hopefully they can reverse this due to the COVID pandemic. Fingers crossed. I am waiting for that answer from them. Standard deductions. As I stated with the itemized deductions, this is standard deductions. You see single under 2020 and 2019. 2020, there's a little bit more money that's through the federal government. $12,400. Then there's head of household, which is $18,650. Married filing jointly, married filing separately, and you see those amounts there. I'll explain what the difference is here. I'm going to create a number. So you see the expenses from out of your pocket, which means company did not reimburse you. This is all out of your pocket. You see there's medical bills and the costs there, eyeglasses, dentists, prescriptions, DMV fees, clothes for work. All of those total $1,100. And you look over to the single standard deduction and that's more than that. You can't have both. You have to pick what's the largest amount. $1,000 or $12,400. $12,400 is the larger amount and that's what you put down on your form. If you spent more than $12,400, for example, you see $1,500, all the amounts listed there, going down all the way down to $8,000, totaling $13,750, which is the better amount. The out of pocket expenses are better, and you would select that and indicate that on your form. If you've received a 1095A, B, or C, this is your proof of health insurance that is required by the government. The government encourages you to have health insurance, and this is proof of health insurance. A, B, and C are different categories that are looked at by the federal government. 1095A are for people who buy their own health insurance through Kaiser, Blue Cross, or Cigna, any health insurance company that they pay out of their pocket. The company will send you proof that you've had health insurance. B is for people who have health insurance under Social Security, SSDI, SSA, retirement, children or program. A form will be sent to you that is 1095B. The 1095C are for people who work full-time and they have a job with benefits. Health insurance is included in their benefits, which means the company they work for will provide the form proving that you've had health insurance. What are unemployment insurance, pandemic unemployment assistance, which is PUA, Paycheck Protection Program, PPP Loan? What are these three? I will explain each of them. Unemployment insurance benefits people who had a work and the deductions were taken out and put on hold until, maybe a person has lost a job or is injured, laid off. They can apply for unemployment insurance, and that will assist them to meet their cost of living. The Pandemic Unemployment Assistance is a federal law that was passed back in March 2020 under the CARES Act. And it created an emergency unemployment benefits program. The PUA provides people who don't have work and they do not qualify for unemployment insurance. They don't have a job. If they applied for unemployment insurance and were denied, they can apply for this, which is a backup. And it's nice. It supports people to pay their rent, care for their family, provide food. Anybody who is self-employed or an independent contractor or freelancer, they don't qualify for unemployment insurance because they have not paid into it with a paycheck. So they do not qualify for unemployment insurance. Instead, they would use the pandemic unemployment assistance to help them. Paycheck Protection Program, the PPP Loan, is for small businesses or a large business. Maybe you own your own business with less than 50 employees under you. That's a small business corporation, LLC, a nonprofit, a faith-based organization, maybe tribal group. And they're not able to pay their employees and they are losing money. They can apply for this PPP loan to help pay their employees and provide paychecks. And this does not apply to our individual tax returns. This is focused on business tax returns. You probably got something in the mail and wondered what it was. Is it a stimulus check? But this is a debit card. You can see this card. It says economic impact payment. This is something that the government is sending out for people who had received a stimulus check. And you probably got this and thought maybe it's fake. Maybe it's a marketing tool and you threw it away. Don't do that. Don't throw it away. This is very important. It has money inside the card. The IRS says that nearly 4 million Americans received an economic impact payment through a debit card instead of getting a paper check. Before you got a check and went to the bank to deposit it, they're not using that. They're using a card instead. If you received the card and saw your name on it, and with the instructions, it shows you how to activate your card. You can do any of the following without any fees. You can make purchases online with the card. Maybe you order online to Target, Walmart, Kohl's, or even Macy's or JCPenney's, Amazon, Wayfair. Any purchases online, you can use this card. If you want to pull cash, you want cash instead, you can go to an ATM machine. And then you keep the card for future use, because if the federal government feels that people need more money, they will automatically send it to the debit card. So make sure you keep that card. If you want to transfer the funds to your bank account, you can do that. You just simply go into your bank and let them know that you want to move money from the card to your bank account, and they will do that for you. If you're wondering how much money is on your card, you can check the balance online or through your mobile phone. Or you can call the number and find out what the balance is on the card. Some people filed in 2018 and 2019 but did not get their stimulus check. Maybe your bank account is closed. You moved to a different bank, but you did not update your bank information to the federal government. Or if you moved to another city or another state and it was not reported, that's okay. Don't worry. People can go to their CPA or tax preparer and let them know that you did not receive a stimulus check. They will add what's called a recovery rebate credit. This form is filled out and will add the stimulus money that was not paid to you. If you owe taxes, say you owe $700, your stimulus, you were supposed to get $1,200, but you owe $700. You will get a refund of $500. If you owe the federal government $2,000, the stimulus money will be used to pay part of the $2,000. And if you got $1,200, that would leave you with $500 owed, which is better than $2,000 owed to the government, right? Some people have not filed for 2018 or 2019 taxes, and maybe they get Social Security and they don't file. Those are non-filers. If they did not get their first or second round stimulus money, you can check with the IRS online, irs.gov, and look for a link. It may say, "Are you qualified?" You answer yes or no. If not, you can call the IRS and ask where your stimulus money, and they will explain to you what you need to do. They may have an answer for you, letting you know if you qualified or not, depending on your income. Some people might get a letter that says you will get a stimulus money, and they're still working on it, which means you'll have to wait patiently due to the pandemic. And hopefully you will get that stimulus money. Hopefully. There's 3 good reasons to file your tax return early. The first one is if you file now, you'll get your refund sooner. Second, it gives yourself more time to save money on taxes that you owe so that you can pay it off. Third, if you file your taxes, you submitted everything to the CPA, everything is finished. This gives you peace of mind, and you can just relax, lay back until next year. So make sure you file your taxes soon before the tax deadline, which is Thursday, April 15th, 2021. Important things to bring with you to your CPA or your tax preparer. You need a driver's license, your Social Security card, tax ID number, any W-2s, retirement money, any income, your mortgage and loan documents, medical bills, all of that paperwork. You bring it to your CPA, your tax preparer, and they will start filling out your taxes for you. If you have children, the tax preparer needs your children's name, their Social Security number, and their birth date. If you have filed taxes last year, perfect. You make copies of that and submit it to your CPA, and they will compare this year's taxes to last year's taxes to make sure that all the information is accurate and everything is correct. These are important documents listed that you need to bring to your CPA or tax preparer. Any more common questions that you may have? Hello. Wonderful information. Wow. This really helps a lot because there have been some changes for 2020. We do have some common questions. The stimulus check. Just to make sure you're correct, the stimulus check that I received is not tax deductible, correct? Correct, yes. If you received SSDI or Social Security, a retirement, and you received a stimulus check, you do not need to file for taxes. Okay. I'm curious. People who work in one state and then they moved out of state due to the pandemic, but they're still working in the previous state they lived in. Do they have to file in both states as an independent contractor or other? I'm wondering what the answer is to that. The answer is it does not matter where you work. What's important is where the company is based, which state. For example, if you work for California or in California, that's fine. They follow state law. If you're working from home in a different state, there's a way to file to the federal government. They will release that to the states. The tax preparer will ask you questions as to where you work, where your home is, and they can provide that answer to you. Okay, so my understanding is if you file for federal taxes, they will ask you if you work out of state. While you file for the state, they will just focus on that one state, correct? No. The federal government taxes is general. It's your income tax, your earnings. That's general. It's all over the U.S., which is fine. And like I said, the slide says home expenses. The federal government does not allow that. That can be applied to the itemized deductions within your state. The CPA or tax preparer will fill in for which state it is and apply that. Okay, got it. I have another question. Social Security income, is that taxable? No, it's not. It is tax-free. Oh, okay. What is dependable or some dependents do not get their stimulus checks. It depends on the parent's income. If parents' income with children was over $150,000, they do not qualify for the stimulus. If the income was under $150,000, the dependents would qualify for stimulus. Maybe they don't know you have a baby. How would the federal government know that you have a baby that was born just recently and it has not been documented yet, and you can't claim them yet? If you've had children for a while, that's fine, but you didn't get any money, you have to check with the IRS and find out where your stimulus money is. The IRS will give you an answer. Me, I don't know. I wouldn't know what the reason is for not getting it. Okay. One last question for you. You mentioned the stimulus checks. Some people not receiving the check, but they did get the card, thinking it was something marketing and they threw it away. That's good information to have. I'm wondering, the debit card, if during the first round people already filed their taxes and the IRS has their bank account information, and during the first round they receive the stimulus money via direct deposit, does that mean the people who've already gotten the direct deposit will get a debit card, or will they get a direct deposit? It will continue with direct deposit because the government already has your Social Security information and your history. So they will send the money directly to your bank account. Okay, and for those who maybe got the card is because the government does not have their information. Correct, correct. And they have their address, so they send a check. That's correct, yes. Well, I think that's it. Okay, thank you. So if people out there in the community have any more questions, how can they get a hold of you? Oh, sure. People can reach me through the video phone or by email. We can make an appointment. I will sit down and discuss with them their taxes and go over any questions. Oh, by the way, CPAs and tax preparers cannot meet in person. Right, right. So what we're doing is there's three options of your choice. You can mail all of the tax information, all of the important tax information to my home address, or you could scan it. If you don't have a printer, that's fine. Taking photographs with your cell phone. Make sure the Social Security number is covered up. And lastly, you can scan or take photos, as I said, and you can send it to my email address. You can call me and make an appointment. We can meet halfway. I could meet at your home, or they could drop it off, give it to me, and I will bring it home, fill out their taxes, and if I have any questions, I will call for more information. Since the pandemic, we're having to adjust with what we're doing. I would love to meet in person. I really, really would, but shucks. Yeah, it's important to stay safe and stay healthy. This is so true. And to reduce the outbreak. And thank God for technology. Oh, yes. All right. Is there anything else you'd like to add? Nope. I'm all finished. Well, this was great information. Thank you for sharing your time. Much appreciated. Thank you. I'm happy to help, and I hope everybody feels better after learning something new for their taxes in 2020. Yes, very much. Thank you very much. Bye-bye.